Did you know that 11.5 million adults have less than £100 in savings? And over 39% of UK adults do not feel confident managing their own money. But what if you could change that and boost your savings? Today I'm going to share some top strategies with you of exactly how you can boost your cash savings so that you can go into the markets confidently, whether it's from a trading perspective or from a long-term investment outlook. So firstly, before we get started, why is it important to have cash savings going into the markets? This allows you to be level-headed in your decision making and not irrational because you're so focused on making money. This also allows you to withstand volatile markets so that you're not concerned emotionally from the up and down swings within that market. Having capital protection going into the markets is one of the most key things that we're trying to achieve from this video. And most importantly, having a cushion of cash to sit on maybe when the markets are in a downturn. It's important to have cash savings going into the markets from a risk management perspective and also from a capital protection side of things. Having both of these aspects are crucial parts in the markets to make sure that you're making methodical decisions rather than irrational and emotional decisions. Having a savings cushion going into the markets is very important. There comes advantages with this. Most importantly, risk management. It allows you to be more methodical with your approach within the markets and not focus on making large amounts of money on a single trade. And secondly, from a capital protection point of view, risking money in the markets that you can afford to lose or you can afford to sit at a loss for a certain period of time. This again allows you to be less emotional as an investor and also allows you to be methodical within your process of trading and allowing the markets to take its time and pan out from an investment point of view. So this is one of the main points of why having cash savings is important. Do you want to save £5,000 per annum? That's £416 per month, which works out to be about £13.86 per day. It's not a lot of money to save, but if you invested £5,000 per annum, you could be in a very good position within your own life from an investment perspective. Okay, so the most important factor here is to have clear goals of exactly how much money do you want to save, how you're going to do that, and putting in place automated apps that can assist you with that. The perfect place to start would be something like Moneybox.com. Now, Moneybox is an app. Certain things on here you can do is cash savings, you can do investments, you can do things called roundups, which is where if you buy a coffee, for example, that costs £1.20, it would round it up and take the 80 pence and put that into your investment pot. And you'll be surprised how much money you can actually save just from using roundups. Moneybox is a great app to get started with, especially from a tracking perspective of how to set that money aside and then invest that in a very user-friendly way and also a safe way. That can be via stuff like cash ISAs, it could also be a stock ISA, and it's got different levels, beginner, intermediate and advanced, and having these different options from a user-friendly perspective allows for investment to become easy for those that aren't experienced, which is the perfect starting place for individuals. The second app, which is great for budgeting and saving and putting money aside, would be Monzo. Now, when money comes into your account, you can automatically split a certain amount of money to go into either a savings pot or one of those cash ISA savings as well. Now, that is also a fantastic area to put into, whether you're working for yourself and you want to put 20% aside for your tax bill, or if you want to put a certain percentage into a savings pot based off of what you think is valuable to you, then this is the best way to do it. Allowing for your savings and investments to be partly automated, allowing it to be hands-off, allows for this to flow a lot more easier for you, and you'll be surprised just how much that you can save. What I'm going to do now is I'm going to explain the 50-30-20 rule. This is a method of savings that can really help you set aside money in a methodical way, and one of the main things that helped me during my investment journey. So this means from the money that you earn on a monthly basis, whatever that is from your salary, 50% should be set aside for your needs. This is your bills, this is your food, this is your living costs, okay? So 50%. 30% should go on your wants. So these are your treats. It's always fair to treat yourself from your own money you've been working for that you've earned. So 30% goes on your wants on a per month basis. And then you have 20%, which goes into savings and investments. Now you've got to look at this as a point of view of that 20% is going to look after you in the long run, okay? So it's very important to do that now whilst you're young, whilst you're hungry, whilst you're working, is you set aside that 20% for investments and savings, because you'll be surprised with the compound effect of how much it can look after you in the long run. So this is the 50-30-20 rule. If you can live by that, it's a great step within your own financial literacy of understanding how to look after your own money. You'll be surprised, guys, how much money you can save just by cancelling subscriptions. Like, let's take streaming devices. How many of you have got a Netflix subscription, a Disney subscription, Apple TV subscription? Do you really need all three of them? Now, if your core goal is to increase your savings and look after yourself in the long term, you can sacrifice at least one or two of these. And if you assume that they're £9.99 per month, then you're going to be saving roughly £120 per annum. This all adds up, so have a look at your subscriptions. You can do this through the iPhone and look at your active app subscriptions. How many silly apps did you download with a 7-day free trial that you're now paying $1.99 a month on? You'll be surprised how many of these hidden subscriptions that you can find. So have a look through your Apple subscriptions and see which apps are not necessarily needed to be paying. I mean, even Twitter is charging a monthly fee at this moment in time. If your goal is savings, do you really need that blue tick on Twitter? And let's start with the simple things: cancelling subscriptions that we do not need. So obviously when your money is sat still, it's very important that money is working for you. Obviously it needs to be readily available. So in my previous video, you'll see that I spoke about Crew Bank. Crew Bank is a perfect place of where it's your current account, but you're still earning good interest rates on your money whilst it's sat in the account. You can access it straight away with no issues, and you can spend it with no issues. And you earn interest on the money that isn't being used, that's just sat in the account. So this is a perfect example of how you can utilize and get yourself those few extra pounds per month, because they all add up at the end of the year. Now, another area that you can look at is high interest accounts. Again, I covered this in a previous video, so definitely have a look at my previous video. But more importantly, have a look at moneysupermarket.com. And this is a great comparison website of where you can look at different accounts, what interest you can earn, and what promotional offers that they have. This is now the time to be proactive in your savings, how you can make that money work more for you. And check out moneysupermarket.com and their savings options. Another part of your income is obviously going into that 50% on your utility bills. So can we save money on our gas and electrics? Again, let's use moneysupermarkets.com and have a look at different comparisons on their tariffs and see if we can get our money working better for us, making sure we're saving money. This is very important to do, and being proactive in making sure that our pot of money is growing rather than just sitting there and spending it when we could be getting services a lot cheaper. Can we be paying less money for better broadband at a cheaper level? So let's check Money Supermarket for that. So then we want to look at cash saving websites. What's the best way that we can use cash savings? Now, I use a website called coupert.com. It's a Chrome extension. It's 100% free. And this has saved me money on my day-to-day purchases within that 30% of the rule, you know, the 50, 30 and 20. How can I save money on that 30% from my outgoings or things that I want to purchase? Well, there's coupons, there's always discount codes, but sometimes you never know where they are. So I use Coupert, which basically will automatically check every single coupon that's been reported online and then chuck them into the coupon box and see if the discount works. It does this automatically for you and it doesn't cost anything, so why not? It saves money and puts extra money into my cash savings pot. So, believe it or not, over 13 million people within the UK are struggling to keep up with their monthly bills, and this is then leading on to debt. So when you have debt, you have high interest rates on that debt, and some people are struggling to make the repayments for that debt. Now, you may have debt on one item over here, another item over here, and before you know it, you've got 3 or 4 different payments coming out from different loans that you've taken from years ago, and they're all paying different interest rates, and it's a big struggle. So how can we fix that issue, or at least make those monthly costs cheaper potentially than what they are individually? Now this is called debt consolidation. Debt consolidation is an important thing to look at when you have multiple loans and you're feeling like you're getting swamped from these repayments. So where can you go? You can check out money.co.uk debt consolidation. Now this is again another comparison site where you put in what your loans are, how much money that you've got within those loans, and it will push out some numbers of potentially a better costing for you on monthly repayments. And if it suits that, it comes at no cost to you from this website. They actually charge the provider off the back of giving them your business. So this could be another aspect that you could explore that would lower your monthly outgoings and allow you to start looking after yourself in the long term. Now, how can we do extra work? Now, the point here is we want to make extra money, and usually that means let's do some freelance work. So what skills do you have on a day-to-day basis that you utilize on your job that you could maybe do a day on a weekend, or you can pick up some freelancing work? Or can you start taking your friend's dog for a walk and charging £10 a dog walk? Or your neighbours, can you put a little flyer together saying weekend dog walks available? These little chores that you can do that maybe are something that you feel is potentially beneath you will ultimately help you build that cash savings pot to look after yourself in the future. Now, a couple of sites that you can do this through online would be something like Fiverr.com. It's great for putting together small jobs. You could also look at Freelancer, which is another site which allows you to bid on freelancer work. Or can you pick up some additional work hours from your boss? Anything along those lines is going to help you with your long-term investment goals. These are small things that you need to look into or best ways of being able to do that. And let's just assume that you managed to pick up an extra £500 per month by either doing some small evening jobs or weekend jobs. I'm going to give you some motivation and just look at this from a compound perspective of if you was to put £500 per month into an S&P ETF that returns an average of 9% per annum. This is what it would achieve within 10 years. What if I told you that could make over £80,000? That is how simple this is. Now, I know I've covered a lot here, but it's super important to keep motivated throughout your journey of savings. Now, this isn't risky. This is just looking after the money that you have and compounding that money, okay? So staying motivated, I suggest maybe looking at that 10-year chart, printing it off and putting it on your wall to show you exactly why you're doing it. Maybe it's something that you're saving up for a house deposit, and this is one of the best ways of doing it. Maybe you're saving up for some money for long-term investing, or maybe you're doing it to start a new educational course like our diplomas within financial trading. Whatever it is, whatever your reason is for saving, you need to stay motivated. And that means that you need to reward yourself. And that comes from that 30% of your monthly salary. So make sure you do reward yourself and give yourself a pat on the back for all of the hard work that you're doing. So guys, if you want to get involved in the investment and trading side, I've also got a link in the description below, which will give you a free share valued between £10 and £100. So guys, get in the comments, let me know which one of the saving tips that I've shown you today is helping you out. And most importantly, also let me know which free share you get your hands on. See you in the next video.